traders. Caroline Alizan here, graduate student of the Grok Trade Mentoring Program. Let's see what happened here on the markets today. Let's see what happened on Wall Street here today. As you can see, the banks got hit today pretty hard and finished really low, minus 2.77%, dragging the markets lower, with the Dow Jones being at minus 9.94%, and then the S&P minus 0.98%. And check this out. Look at Apple. It just rocketed here. It went 11.13 points up and finished the day at 2.78%. So that is a significant jump, and it helped NASDAQ quite a bit as the best performing one here today on Wall Street. So that's what happened here. And the Q's up 0.04%. Not a significant jump, but Apple significantly pushed the NASDAQ higher, which was a leading guy here in our game. So that's what happened here today. But anyways, it is Monday, September 19th of 2011, and let's take a look at our pretty cute chart. That's what we've been waiting for the whole weekend. Oh yeah, we are definitely facing some overhead resistance right here. We are testing it the second time here today, and the resistance that we're facing here, it's at about 56.65 mark, and then the next one up here where you see this blue thick trend line, and it's at about 56.68. So that is a significant area of resistance that we are facing at this point, and we're hitting it the second time. We're still making a higher high, but check this out. We are making a lower low here today, bouncing off of a significant area of support down here at the 55.30 mark, and we are still above the 8 moving average, which is pointing higher, which is a bullish sign at this point. So we are above the 8 moving average as well as the 50-day moving average, which you see here in red, and both of them are getting ready to cross over. Both of them, actually the 8 moving average is pointing higher. The 50-day moving average is getting close to the 8 moving average, and the 8 moving average is getting ready to cross over the 50, which is a bullish sign again. But we're still facing that overhead resistance as well as the 200-day moving average, which is here in blue, and it's sitting at the 56.25 mark. So that's what we need to pay really close attention to tomorrow. Again, this area of resistance right here, the 57 mark about, then the next one up here would be at 57.18 mark. That is significant, as well as the 200-day moving average, which is a very important area to pay close attention to. And look at this. Look at the MACD. The MACD is still pointing slightly higher, but it's resting at this point in time to me. That's what I see here on the MACD. It's above the zero line, which means that we're still in the bullish territory, continuing higher, but it's resting. It's slowing down a bit here. So expect a major move happening here pretty soon, and we could go either way. We could go higher or we could go lower. But the other thing that I see here on this chart is that we could be putting on a high base. In terms for us to call this formation a high base formation, we'll have to get another candlestick right here tomorrow, trading between the high of today, which is the 56.91 mark, and the low of today, which is the 55.43. So that is the trading range that we'll be watching here really closely tomorrow to see if we're going to get at least one more candlestick up here, and then we will call it a high base formation. So that is another scenario here that we could be having. But first of all, wait for tomorrow to come. Wait for the day to go by and see if we are going to get that candlestick right here trading between 56.91 and 55.43. And then we would have to wait for a breakout to through the high of today, the 56.91, as well as that overhead resistance that we are approaching, 57.18. And then we could continue higher all the way up to that next area of resistance up here, the 58.30 mark. And then the next one would be at about 58.66. And the major one up here would be at about 59.29. So these are all major areas of resistance on our way up if we ever go higher. But if we do not get higher, if we do instead break down through the low of today, through the 55.43, and then also we'll have to break through or crossover, like or cross point on two major moving averages, the 50 and the 8 moving average, and then also we'll have to also break through that lower area of support right here, 54.42. That's a lot of areas of support to break through, and in terms for us to go lower and get bearish again. And then the next one down here, 53.77. So once we break through all of them and then close below the 53.77 mark, then we could have a pretty nice chance of us getting lower to the next area of support down below here, the 51.49 mark, and then the next one down here would be at 50.61, and then a major one right here, 49.73. So these are all areas of support that you need to pay close attention to. But first of all, watch for a candlestick to form right here between the high and the low of today, and then also pay close attention to the MACD to look for confirmation, and watch the volume to see if we are getting any spikes.